Let's keep it with the markets and focus on the fundamentals as well. Amit Nigam, Head of Equity at Peerless Mutual Fund. He joins us on the show right now. Amit, hi, afternoon. Year-end and the markets as well seem to be on a holiday mode somewhat. Where do you think the next trigger is really going to come in for domestic markets?
Hi, good afternoon. So you are right. The activity in terms of the trading volumes, etc., are at much lower levels given the fact that we are in the month of December. A lot of market participants go on leave. But I think the markets are clearly looking for the next trigger. Now, what would that be? To my sense, it would be the next month when we start seeing the corporate results for the quarter which is just gone by. And as we all know, it has been quite an eventful quarter. So after the first 6 months of corporate earnings, we were kind of reconciling to the fact that this would probably be a flat year again. We had the first half when the Nifty 50 companies reported a very flat earnings, and we were looking at a small single-digit earnings growth. But I think this quarter would now be a complete washout. We don't know what kind of damage would actually happen. So that's something for which we'll have to wait and see. And post that, probably we will be moving with some expectations of the budget, which is earlier this time. So these are the two things which probably the markets will wait for before moving to the next level.
The dichotomy, if you will, in investors' mind about specific pockets is about whether the cheap is looking cheap enough to buy right now, or could there be a time correction which could also lead to your capital not moving up or appreciating over the course of the next 3 to 6 months in some of the active names, that is, be it NBFCs, be it banks, so on and so forth. What is your thought? I mean, when do earnings revive? When do any meaningful moves come into say financials? Let's start off with financials.
Sure. See, a lot of things when we are looking at stocks, it's never about the valuation alone, but it's also about the kind of expectations that are built in around the growth of that business. Now, in this quarter, as I was just saying, being a very eventful one, we have seen a sharp pullback for those companies which were directly consumer facing. So whether I was looking at consumption companies or even finance companies, because financial services is also a product which we consume. Now, the companies which you were, so let's say the financial space, we would see some kind of a pressure in the category where the collection was more in terms of cash. So probably very, very small ticket financing which was happening, where the collection was happening on a daily basis probably and in cash, are the ones which will probably see some kind of a brunt in this quarter. And we have seen a couple of companies actually come out and make presentations to investors that they are seeing some initial signs of pullback. However, as the month has progressed, in fact as the month of November and December have progressed, they have seen somewhat recovery. But going ahead, are we building in a case wherein people will shy away and move away from financing, which was essentially being used either to grow their own business or for their consumption? So the answer to that in our understanding is a no. Financing would be required as we go ahead, because people in India have just started earning and meaningfully enough so that they have taken care of their basic necessities, and to fulfill their aspirations, their desires, the bridge is always done by the bridging is always done by the financing. And therefore I think with time to come we will see normalcy return to the business, and the financing which is done on sane terms, on a very let's say a risk controlled manner, will continue to do well.
Okay, besides the sectors that you've just highlighted, what has been the composition at Peerless, or rather in the last 1 month, have you made any drastic changes in your portfolios?
So what we have done is that initially we had kind of shifted our allocation from consumer facing companies. So we were overweight stocks which were predominantly in the consumer space. So we did knock off a little bit of our exposure there, but when within a couple of weeks we saw the valuations correct by as much as 25 to 30% in some of them, and to us, even after budgeting for the fall of let's say the sales in this quarter and the quarter come by, the valuations were offering comfort, and we would have added back some of those. Now, having said that, we are, as I said, we are not looking at a scenario wherein people will stop consuming the way they were. So maybe it would get a little bit postponed, especially the purchase items which are large ticket. They are the ones which tend to get postponed in such times of uncertainty, when the cash is not there in your pocket or even in your bank account which you cannot withdraw. But it's gonna come back. So probably from the first quarter of next year, we would see the consumption come back, and we would be very happy that we took exposure to these companies again.
Okay, good chatting with you. Thank you much for taking the time out and speaking with us today.
Thank you very much.
That's the view then coming in from Peerless Mutual Funds. Let's also talk about what the market focus is right now. And as we bid adieu to 2016, it's time to focus on your strategy for 2017. And Nikunj quizzed Samit Vartak of Sage One